Yes, good afternoon, everyone. This is Alex Gerchik, and today we begin our first lesson where I'm going to try to teach you what are the levels, how to differentiate the buyer and a seller, who is stronger, why this level is strong and another one it does not. Just for you to understand, why should you listen to me first? I've been in trading from 1998. I've been in a business from 1996. I started as a broker, worked for 2 years as a broker, and in 1998, I started to trade. I always trade my own money, and I know how to do this job well. I basically, in my life, looked for probably over 10 or 12 million charts. I used to do pure day trading. I used to do just the homework of 12 to 1400 stocks every single day. So I know technical analysis very well, but the most important thing, what I will try to teach you, it's not just only technical analysis. In my lessons, I will try to teach you for you to understand how the market works. It does not really matter. It's a Forex, stock market, futures, or anything else. It does not really matter. And the reason is, and the answer is, it's very simple. In a market, there's only two players, a buyer and the seller. And each one, like a hunter, basically like an animal, live its own prints. So for you to understand what's going on, at what level is a turnaround, why this level is strong and another one is not, you can really understand and feel, and have a feel for the market. The most important thing in a market for you to make money is to anticipate expected move. What does it mean? For example, we'll go straight to the charts. Here we go. This is a chart for the euro dollar. If you can see, that's we had a level right here. You see, 113,635. What's going on with this level? Why we took that level? Because if you can see, let's make our job easier. Let's make our job easier, and we will make a print screen, and together with you, we're going to draw the level so you understand how it works, and you're going to know what to expect. Okay, this is the paint. That's what we drove. So let's draw the a line. Hold on 1 second. We'll start, let's say, from here. We'll make. Okay, so we have a line. If you can see why we took this line, because all the time around this price, it's always a moves. Take a look. We're gonna even go further. And we see a lot of false breakouts. Look at this, breakdowns. 1, 2, 3, 4, 5, 6, 8. The most important thing is for the false breakouts to be short. What does it mean? The bar or a candle that doesn't really make a difference what you trade, bar or candles. The shadow not supposed to be long. Why? For one simple reason. Why shadow, and what is the shadow? Big player, when he takes the position, he can take the position only against the other player. What does it mean? Buyer can take the position against the seller, and seller can take the position against the buyer. Big buyers, when he takes the position, he got to build the position, and it's going to take anything. Just for you to understand, we'll come back in a minute, and for you to understand, figure out this. You're an extremely rich person, like a market maker. You have hundreds of millions of dollars. It means you can do anything you want with your instrument. Let's say it's a euro dollar, right? You're a big bank, Citibank, Deutsche Bank. You're a major player. You have a very large amount of money, and you have a money flow from your clients, and you know exactly what your clients want. So what do? You can do anything you want. You can take the price higher, you can take the price lower, you can basically keep the price in the channel, you can have a consolidation, so you can do anything you want. But as you can see, around this price, you always have a false. So, you know, price goes up and then come back. Price goes up and then come back. What does it mean? At the certain level, once the certain level breaks and the price stays above or below the certain price, only then you can say it's a strong movement. If you can see today, for now, we have a little false breakout. What does it mean? If the price is going to stay above 113, let's say 65, we're going to don't save like this, you see? If we're going to stay above, what does it mean above, staying above? It means the daily chart, supposed to close higher and stay higher. Then, in this case, we can really understand that the move is going to be higher. If we're going to stay above let's say 1375, then the most important thing is going to be to break 113.85. But once we're going to go above 114, then the move is clear. What we can see, that's the pullbacks. You see, one pullback, second pullback. The pullbacks are very short. It means the buyer is extremely strong and he's accumulating a very large position. But for now, most important thing, it's not just to buy fast. Sometimes you rather pay a little bit higher premium, but make sure the price is going to stay where basically it's supposed to stay. So once we have a few levels, it's a 113.76, another one is 113.87, then the most important one is 114. If we're gonna close above 114, the most important thing when we're gonna close above 114, do not do a very large spike like here, you know, because it's gonna be very hard to hold on to it. Why? When the people see a large spikes or a large candles, they have a tendency to sell. You see, two large spikes, sell. Two large spikes, we can have a sell. So the most important thing right now is to have a move like this. You see, small one, where basically it's accumulation. So if we're going to stay above 114, then basically we can have a very, very strong movement on the euro. Next one is going to be 115. For you to understand, each instrument goes from level to level. That's what the people look for. So the most important thing we're going to do right now, we're going to make a picture and draw some important levels. So this way, when we're going to sit down and watch our first lesson, you're going to understand why is the level important and which level are important. So that's what it is. That's what we draw. Let's start first. We'll go in the bottom line. If you can see level number one. You see why this level is so important? Because first things, turnaround, correction, the most important thing. Can you believe it? Figure out this. This is a train, and the train going at a very large speed. Everybody's selling, everybody's worried about, and the most important, as you can see, I draw the lane from left to right, not from right to left. And if you can see what we have. 1, 2, 3, 4, 5, 6, see, 7, and the most important thing, 8. See? So what do we have? We have a very extremely strong level. And we did it from left to right. And if you can see on the right side, it's exactly repeat the previous levels. Why? Because at these levels are limit orders. Just for you to understand, what can the stop movement of the high-speed train? Just a big wall. So in this case, this is a big wall. You see? There's two ways the instrument will behave right next to the wall. It's either it's going to have a false. You see, like here, it was a false. Or it's going to hit right exactly into the level. It's all depend on how strong is the seller. In this case, you see it stopped a few times. So this is very important thing. How to identify the level? It's either where the basically instrument moves and holds many times, breakdowns, either complete turnaround. The turnaround is the most important one because they're the strongest one. Let's say let's draw another lane. This is going to be a next stop for the instrument. And this is going to be a next stop for the instrument. Hold on. Now you see we're staying above. The most important thing, we're trying to hold above the level. If we're going to stay above the level, that's why we have a very large chance for the euro to go up. The most amazing part about the market, it does not, as I said, it does not really matter what you trade, let's say about the Forex. That's most of the instruments are range instruments. If you can see, just for you to understand, that's what it is. You see, hold on. That's where the large, that's where the large accumulation goes. You see? That's what it is. You see? That's a large accumulation. So just for you to understand, we have a large channel. And a matter of probably, you know, let's say, almost a year from the previous June, we've been from the $1.08 to $1.14. You see how we're going? You see? That's how we go. And a few times we get it out. How to identify the trend? For now, we have no trend. Once it's going to break above 14 and it's going to go higher, then we're going to have a trend. So the most amazing part about the Forex market, that's most of the currency pairs are in the range. In the range, you can make a lot of money. Just for you to understand. This is the range. And this is not the range. It's a very small range. Here, it's very hard to make money. This is a channel. You see 110 to 108. You can only work from the levels of channel. That's all. That's the most amazing part. Don't try to get in every single move. That's the problem. A lot of traders do lose a lot of money because they don't understand the levels. Just for you to understand, after a consolidation, let's say between 108 to 110, it's going to be always a breakout. The most amazing part is for you to understand where the currency pair is going to trade, above the level or below the level. So just for you to understand, we took a liberty of drawing apart. And if the euro, just for you to understand, we'll figure out this way. Today is March 30th, right? So you're going to look at the chart and you're going to see either this guy do understand what he's talking about here, he doesn't understand anything. So at this level, it's a 113.75. We're either going to see a breakout and a closing above the level, either we're going to basically see a falls. We're going to go higher and then we're going to come back lower. Then it means the buyer did not get enough of the position and he's not going to go take the euro down higher. A big buyer can do anything he wants. Sell, buy, hold, false breakout, breakdown, breakout, range. He can do anything he wants. So your job is very simple. You have to stay on his side and to understand the market. So the most important thing is to start drawing. Let's say we'll start with the British pound. British pound right now is in the range. I'll draw you a few pictures so you'll understand. We always don't forget look for the levels where it was a turnaround. You see? That's what it is. That's the most important level for now, 145. If British pound is going to stick above 145, then we have a very large chance to go up. You see what's going on? The correction, it becomes smaller. So even we're going to correct, we're going to have a basically new wave. You see what's going on here? We stay above, below, above, below, above, below. It means they do fighting for this level. It means this is a definite level. So the most amazing part about the chart, each player, buyer or a seller, leave prints on the chart. For example, when you see a move like this, all you do, you just sit in the move. Every time it's either have a false or it stops, that's where you're paying attention for the price. So right now, the most important price for the British pound is 145. At 145, we're either waiting for the breakout and staying above 145. That's the first part. Either we have a move to the upside like this. Sorry. Either we have a move like this, and then it's going to be down move again. So we have to, at 145, we just figure out one thing. What do we do with this position at that price? If you're already in position, it's perfect. But if you're not, make sure you only enter at 145. Why is no reason right now to get into the position right now? Because right now, our take profit, it's going to be equivalent to the stop loss. And this is originally not the good or right position. So the most important part you have to do, you either buy above the level once it's consolidating, either have a trading falls up and then down, but you don't buy here because it's already moving and it's impossible to jump into the moving trade. So the most important thing when you're analyzing, that's how you start. You take, let's say, Japanese yen. You identify a very, very important levels where the turnaround, 88. And then you have another very important level where it was a false, you see? At these levels, that's what you do. That's how you trade. That's how you trade. Just always remember one thing. A buyer and a seller always leaving prints on the charts. They cannot lie to you. The most amazing part for you to understand is to understand from what level the move are going to be. If it's a breakout, then basically we have to come to the level with a very short bars or a very short candles. Let's say we'll take gold, right? We'll take gold. What we're seeing in the gold, you see around that price right here, we had a very large consolidation. So everybody is fighting, buyer fighting with the seller. But don't forget, nothing we can do with the gold right now until the gold is going to hit 1260. Only once the gold is going to hit 1260, only then we can utilize that the gold is going to go higher. For now, it's a channel. Same as the oil, right? Let's say we'll take the oil. We have right now a very strong level. You see, 42. Once gold oil is going to break $42, then it has a chance to go. Before that, it does not. For the oil to start to go to the downside, to the breakdown, it's got to break down to 36. So right now we have a channel, 36 to 42. That's how you trade. You either trade levels of the channel, either you trade the move. But don't forget, you cannot enter the position here because most of the time, if you enter to the position before the level, your stop is going to be equivalent of the take profit. The most amazing part for you to remember, two players, buyer, seller, both of them, hold on one second. That's me again. The most important thing is the two players, buyer and seller, both of them are leaving their prints and the charts. That's how I utilize and learn how to trade. And the most amazing part, you take a piece of paper, how I do it, and I write it down, what to do. You see, I have the page, and I'll show it to you. You see, this is a homework. And I put the instrument, and I put the price, and I only trade everything from my list. Big moves during the day, if you're not ready for them, it's going to be very hard for you to trade. So the most important thing is to understand what exactly are you going to do today. So your job is, first of all, identifying the levels. Second of all, identify a buyer, seller. That's the most important thing. And the third one, you trade. You either trade 5-minute chart or 30-minute chart or 1-hour chart or 4 hours chart. It does not really make a difference because you have a price. That's the one thing you work with. It's a price. So if you can see, for example, I'll show you one more time. if you can see the price 40, you see, that's the price. It was a false, you see. If it's gonna break again above $40, then it's gonna go much higher. Anything which stays right now below 40 is still in the downtrend. So I hope the first lesson you liked it. If you have any more questions, as I said, I have almost 20 years of a trading experience. I am a professional trader. I trade my own money. I live a very good lifestyle. I drive Bentley. I have Maserati. I have a motorcycle. I am not some kind of guy who made it $500 in the market and tried to make money and educated. As I said, I'm running the company, Gerchik Co Company, and I hope you liked our first lesson. If you have any question, you can send us in the email, look at the video, and ask the questions. But as I promised to you, I do know exactly what I'm talking about. It was Alexander Gerchik, and I'll be more than happy to answer all of your questions. And we had our first lesson, and I hope you like it. And next time we're going to do much better and much more. Thank you very much, and have a nice day.